Hello, chart watchers, and welcome to this Friday, August 23rd, 2019 Market Watchers live show with your hosts, Tom Boley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. As we take a look at the market today, you can see the Dow Jones Industrial average down almost 500 points. The S&P 500 down 58, the NASDAQ down 188, the Russell 2000 down 31. 10-year Treasury yield was up actually in pre-market this morning and then completely reversed, is now down 9 basis points back to 1.52%. Volatility index, we were drifting lower, but not any longer, up 4.25 points today on the volatility index. That's more than 25%. Technology really struggling today. We'll get into some of the reasons why, but technology currently down almost 2.75%. Energy also having a rough day, challenging the earlier lows back in, about a week and a half ago here in August. Utilities performing at least better on a relative basis, along with real estate. So the defensive groups both reversing off of earlier highs that set new recent highs, but they are down now, still better than other areas of the market. Apparel retailers, remember how strong they'd been for a week? As soon as we get a little news on the trade war, group completely falls apart. That was one of the things that I had talked about with Julius de Kempenaar earlier this week. This group, actually these two groups you can see right here, commercial vehicles, another area, and computer hardware. These are areas that tend to get hit pretty hard when the trade war escalates. And once again, you can see these groups really struggling today. A couple of companies out with their earnings after the bell last night, Intuit, Salesforce.com, a couple software names. Both reacted very positively to their earnings reports. Both reported pretty good numbers, but they picked a bad day because the overall market just not strong. And with everything selling off, you can see big reversals taking place here. But they are both up on the day, which is pretty impressive given all the selling that's taken place. All right, Mary Ellen, it's Friday. Welcome back. And man, a couple more tweets and down we go.
I'm telling you, just have to hold on to your hat. It's just when we thought things were firming up and the big fish comes out and hits us across the head.
Yep. You got to hold on to your phone or your computer or something, because that's probably where you're seeing that tweet. Mm-hmm. But yeah, it was just another one of these days where we started off. Everything actually looked pretty good. I was writing my blog this morning, and I was looking at futures, and I think at the time Dow futures may have been up 40 points or something. I don't know. And then I wrote like another sentence or two and looked back, and it was minus 30. And I was like, okay, that's weird. Something just happened.
Time to change the topic, right?
Yep. And so then I found out, China had announced that they were going to,
retaliate.
Yep. $75 billion worth of, or tariffs on $75 billion worth of U.S. goods, mostly around the automobiles. And then, of course, we got the Trump tweet firing back saying U.S. companies, essentially he was ordering, I'm not even sure what that means, but he said he's ordering U.S. companies to find alternatives for their production to basically get out of China. And I don't even know how to interpret that, but the market knows how to interpret it.
Oh, yeah.
It's uncertainty, and everyone's just selling. And so we'll see, how far this goes down today. But yeah, things aren't looking very good right now.
Not pretty.
No, it's not. But we've got all the answers, right? Over the next.
Yes, we do. We do.
Next 55 minutes, we'll bring everybody up to date and know exactly what to do before this show is over. Probably stick your head in the sand. That's what I'm probably going to be doing. Anyway, we got an upcoming schedule there on your screen. I'll be doing a workshop next week. Jesse Felder will be joining us. And then I've also got seasonality at the end of next week, toward the end of next week. So be looking at September, give you an idea of what to look for there in September. Historically, not a great month. Today, Mary Ellen, of course, joining me. We'll be doing the what's hot, what's not. Some of what was hot yesterday, not so hot today. And that's the way the whole week has been. But 10 and 10 will be coming later in the show. IPG Photronics Corp, IPGP. That is the first stock. So if you want to take a look at that and just check it out, see if you agree with my annotation later and my thoughts on it, feel free. But first, let's get into some of the economic reports. Actually, there was one big one today, and that was the new home sales. You can see July new home sales on your screen there. A little disappointing. They came in almost met expectations, but did fall a little bit short. So what kind of reaction? Well, actually, the reaction wasn't bad. The bond market wasn't in bad shape really until the tweets came out. I think that has much more of a bearing than the new home sales, to be quite honest. But we are seeing the 10-year Treasury yield drop. And anytime we see that, money's rotating into Treasuries. That's taking money out of equities. And of course, we're seeing the stock market get hit pretty hard. The 10-year Treasury yield down right now 8 basis points, just under 1.53%. And looking at this 3-year daily chart, you can see that we seem to just be on a crash course for the July 2016 low, which was just below 1.4%. Doesn't seem that far away anymore. I would have never thought back in November when we were at 3.25 that we were going to head back down here. But things change, and with the trade war escalating, that certainly isn't helping. 10-year Treasury, I'll watch for that 135 to 140 area. It seems to be coming to a market near you. All right, let's move on to earnings reports. And there were several out last night, including Salesforce.com, Intuit, VMware. VMware didn't get a very good reaction. Intuit, Salesforce, much better. Foot Locker was just a disaster. And we'll take a look at that here in just a second. But first, I wanted to pull up the Intuit chart. And this is on a relative chart, so give you a little idea what's going on, not just on the chart, the absolute chart, but also how it has been performing relative to its peers. And you can see a huge move today in Intuit, of course, with its earnings, breaking out to a new 52-week high relative to its software peers. Software is still okay. It's pulling back, no doubt, but the overall uptrend still remains in play. And of course, you can see we are getting that breakout on Intuit, at least at the open. We'll see whether or not that holds into the close. Software continues to be one of the better areas of the market when we look at relative performance to the benchmark S&P 500. So overall, I think Intuit looks good. They had a good report, as I showed on the screen. The earnings per share came in better than expected. But we do have to see what happens because of the overall market environment today. All right, let's take a look at let's look at CRM, which is Salesforce.com. And Salesforce.com, I'm not as bullish. I mean, we did have a nice reaction, but you can see that the highs continue to get lower, the lows continue to get lower. And unlike Intuit, you can see that this has been in a steady downtrend. Now, we are obviously getting a boost today because the stock gapped up relative to software. I think the stock's got a lot more work to do. Volume looks good, but as you can see, it is down near the low of the day. It was up at 158 and change, now back down to 153. Again, the overall market environment having an impact here. But just when I look at the chart, I just don't see the same bullishness in CRM as I see in Intuit and other software names. So I personally would avoid it. VMware, this one just not good. And this was a favorite stock of mine back earlier in 2019. I mean, we were in this nice uptrend. I really liked VMware, but you have to recognize these changes in character on the chart. And we got that with heavy volume, late May. That was earnings related. Big gap down, lost its trend line. And then notice that reaction high that day up near 184. We never got through that. That's where the sellers came in after that earnings report. We tried to recover. Sellers came in. Well, about a month and a half later, sellers came in again right at that same level. And you can see the downtrend and look at the volume trends. Just because it's a software stock doesn't mean it's buyable. The relative strength here is horrible. We broke into a new 52-week low versus software. Volume trends are awful. I do not try to catch falling knives. I would stay away from VMware. Foot Locker came out this morning with a report. They matched estimates on the top line, on the bottom line, but they missed the top line. And look at the gap down. The other thing that I really pay attention to is that candle body right there. The close was 37.02. Today, it opened at 37.01. And you might think, well, it's just a penny. It doesn't matter. When I see it open just below that prior low close, that tells me it's probably not going to be a good thing. It rallied back, but as soon as it came back down and broke that open, you can see the move to the downside. Foot Locker not looking very good here. All right, let's move on. I wanted to show you back to the dashboard, and you can see right now NASDAQ down 180 points. A lot of points today. We'll see if we get a rally later today. Doesn't feel like one, but we'll see. Going down here to the scooter movers, ROX right here, ROX. That's Castle Brands, and you can see that little mini chart breaking out above the double top. Well, let's pull up the chart here and annotate it. You can see from a scooter perspective that we are now breaking to a level and looks like maybe even eclipsing the December high that we saw. So the scooter's on the move. So the question is this presenting an opportunity for us? Well, the stock has run a lot. It's only a 67-cent stock, and I don't pay attention to too many of these small stocks if you've followed me over the years. So from that standpoint, I personally would avoid it just because of that. I'm just not a penny stock kind of trader, but it is breaking above some prior resistance levels. It is trying to move to about a 4-month relative high versus the Ventnors Distillers Group, its peers. So I think that it's improving, but you got to understand what you're investing in here. It's a small, very small company and breaking out, but I'd have to keep my stops in play and make sure that you can take on that additional risk by investing in companies this size. But because of the movement and all, and that big break on the scooter, that is your scooter mover of the day.
All righty. Let's go ahead and get started on upgrades and downgrades. Not a lot of action there today. Very, very few on the way of upgrades, and not many more on the downgrade side, but we certainly have some interesting names to cover. First one we're looking at here is Dollar Tree, DLTR. This is a stock that really got hit harder than its peers. It's a retailer, discount retailer, on the tariff-related fears, broke down entirely. So we can see the stock is attempting to reverse this downtrend. The stock is due to report earnings next Thursday. Take a look at the RSI. We're not quite up at that net neutral. And your MACD has had that positive black line up through the red. We would need to get up above that zero, price up above these moving averages, and an RSI positive before turning bullish on this name. But it is interesting that ahead of the earnings that the stock is being upgraded. Next one is LAZB, LZB, got upgraded. This particular company already reported earnings, a little sloppy in here, but an analyst did come out today. They like the fundamentals, upgraded it. So it is up almost 2% in a very difficult market environment. We can see RSI, MACD just waffling around that net neutral. So neutral on the stock. Let's look at and this particular stock is Altria Group. And today a bearish analyst turned positive on it. Normally that is good. You will see the stock pop. It's down a bit today. And overall, we can see this very consistent downtrend. These going back, these particular stocks, tobacco related, are really suffering. Sales are down and the stock does not look good. Let's take a look at a couple of downgrades. ARCC, this particular stock had been hitting a new high. Today's action really just pulling back to this upward trending 10-day. It's all about yield. This guy has an 8.5% yield that analysts are favoring. We can look at HPQ. This is another downgrade. Company came out there, take a look at this gap down 7%. Earnings related, CEO stepped down. They're having quite a bit in the way of woes, so we can see more potential downside for HPQ here. And a couple of retailers, L Brands, that is Victoria's Secret, is their best known. We can see the stock really has been suffering. Today down another 8% on that downgrade. I think we have time for one more here. This is Macy's, another one that really just hitting the stock when it's down. This is a gap down on earnings, and analysts are still revising estimates down further. It's down 3.3%. We can see it is a bit oversold when we get this RSI down below this 30. MACD is negative as well. So you may get a little bit of a bounce, but overall, very confirmed downtrend. And that is it for upgrades, downgrades. We will be right back after this commercial. We are back. Let's take a look. There actually are several areas of the market that are hot. We are also, of course, going to cover what is not hot. But to begin, a lot of these names on the what's hot side are going to be earnings driven. So we're looking here at Target, TGT. Stock came out with numbers earlier this week, gapped up tremendously. And I've talked about this. I have a number of courses that go over how to play these gaps up, because oftentimes it really is just the beginning of a move. We can go back here to May with Target. This is another gap up on super strong earnings. The stock did continue to advance further. Ideally, you do want to see that super big volume. Institutions want in. It's continuing to be supported. Even today with the negative action, it's holding up well as far as this gap up. It is a bit oversold. RSI is up here above 70. Your MACD had that positive crossover and is up here in positive territory. I would say that this stock could very well mark time, digest this big move, but it was more than just the earnings. The company is doing a lot in the way of changing their systems, innovative digital sales, and so forth. Another retailer that came out with good numbers, and this one really looked quite a bit different going into earnings. This is Lowe's, L-O-W. Take a look at how depressed the stock was. And of course, a lot of these retailers did get hit, tariff-related fears, and the company did come out with earnings gapped up tremendously. And we can see, similar to Target, that it really is sustaining and holding in with that gap up. Huge volume. RSI, MACD just trending up into this net neutral zero. So another one that looks poised, should the markets right themselves, to potentially trade higher. Urban Outfitters. This is a name that was super big years ago, had since fallen out of favor. But let's take a look, because this company also came out with earnings, had a nice move subsequent to that. Take a look at that big volume. So we're really in a very interesting position here with Urban right now. It has now broken above its 10-day, that green line, as well as above that 50-day simple moving average. We can see the RSI is positive. MACD had that positive crossover, black line up through the red. I would like to see that get up above zero, and we are awfully close. From there, we could potentially rally. We're at about 23. We could rally up to 29. That is that 200-day simple moving average. You want to keep an eye, because that could very well act as resistance. But we can see that the stock is potentially reversing that downtrend. Home Depot is another one. Now, these Home Depot came out with their numbers last week, but we can take a look at it because they had good numbers. We can see this gap up, and actually it is continuing to advance higher. The stock has broken out of a 6-week base, actually 7-week base, up to new highs. Lots of big volume on this action as far as this gapping up after this very, very strong earnings. And then one last name on the retail side that we can take a quick look at is GPS, and this is a name big in the 90s. They've had their periods of strength. This is Gap, another one that has fallen out of bed, so to speak, is attempting to reverse following earnings. However, finding resistance at this downward trending 50-day simple moving average. So it really does seem stuck, that downtrend firmly in place. Let's take a look at some home builders, and Tom did touch upon the new building numbers that were released, but we're going to take a look at some of these builders because interest rates, that's another area. Tom talked about the 10-year down there at 1.5, but a lot of these home builders, there are bullish outlooks subsequent to the fact that the economy, while not super strong, is chugging along. Recession fears be darned, because these home builders are putting out pretty good numbers, and we can see that this is BZH, Beezer, a little bit extended above that 10-day simple moving average. Not the best name. Let me show you another home builder that looks a little more constructive, and this is KBH, KB Homes. And we can see that in this case, the stock has broken out of a multi-month base and is hitting new highs. Now, certainly it is a bit extended, but from here, the stock appears to be in a very confirmed uptrend, and your RSI and MACD are both positive. One last name to take a look at here in the home builders. These guys are entry level type homes. We can see this big gap up here on earnings. Stock really just digested that gap up and is more recently has broken out of a 3-week base on nice volume that could consider continue higher. And then one last area that is hitting a new, that are doing well. Tom talked about CRM and Intuit on the software side. There are a couple of other names that are bucking the general relative deterioration. This is Twilio, TWO. The stock is up about 3.5%. It does still have work to do, however. It's broken up above this 10-day simple moving average. Your RSI is not quite positive. MACD, we've had that crossover, that black line up through the red, but we are well below an area of becoming positive. So not quite bullish there. Shopify, this one has been a real big winner. It's having another good week. We can see when we look at these stocks, you want to see a stock finding support at an upward trending. I'm just going to change this very quickly. One of these simple moving averages so you can really key in on what I'm sharing with you here. These stocks tend to pull back either to their 10 or 21 day. And by these stocks, I mean faster moving names continuing to find support as they trend higher. Shopify hitting a new high in price. And then I'll just mention that REIT stocks and utility stocks are doing quite well. I did want to share one particular REIT stock that looks very attractive to me because a lot of these REIT stocks are hitting new highs and doing quite well. This is CareTrust that really has not participated in the recent rally, but take a look at how more recently it is reversing this downtrend. We can see the RSI is positive, as is that MACD, had the positive crossover, now up above this net neutral zero. For my work, I do tend to prefer to traffic in those leadership names that had been rallying, but this is an interesting stock, potentially reversing its downtrend. So that is it for some of these upgrades. Tom?
All right. I'm going to go ahead and start. I'm going to look at Estee Lauder here in 1 second, but I wanted to just show you the personal products index, because we did have a huge gap up in this index to begin the week. We haven't really built on it, and you can see we're right up against some key resistance, but this has been a pretty solid week for a lot of these personal product companies. So the big move up here, testing the overhead resistance, got a strong PPO, and now we'll take a look at some of the stocks within this group. Estee Lauder came out with great earnings to open the week. You can see the massive volume. I love this candlestick, and just to annotate it quickly, I would be watching for any kind of a test back there, that where the stock opened. And then the intraday low, this is where the buyers come back in. So it gapped up, pulled back, and then when it went back through that open, that's usually a pretty good sign. So any kind of a pullback, if the market is weak, I think it gives you an opportunity to get into some of these strong names like Mary Ellen was just saying. And I think Estee Lauder is one of those names. So 191, 192, up to about 195 is what I would be looking for with Estee Lauder. Let's take a look at the next stock, which is Elf Beauty product, very similar to EL, which is ELF. And on this chart, you can see again, 4 days this week, it was moving higher, but today pulling back. We did have the breakout yesterday. That is a shooting star candle on heavy volume. So yesterday was a little bit of a warning sign to begin with. And then, of course, with the market just being weak, I still think this is a stock in a nice uptrend, great volume trends. Pull back to test this rising 20-day moving average is something that I would certainly be looking for. EPC, this is Edgewell Personal Care. Another one that now when you look at these companies, Estee Lauder looked good. Elf Beauty looked pretty good on the chart. Nice uptrends. This one's a downtrend. So, yes, it's having an up week, but I'm not going to be a big fan. And if I did get into it, I would make sure I had a tight stop because it has been an underperformer. Watch that 20-day moving average. It's been drifting just above that all week, but it has had a good week. So I wanted to show the chart. Let's take a look at CL, which is Colgate Palmolive. Gap up on Monday above the 50-day moving average. It's been holding both of these moving averages. And earlier today was breaking to a new high. Now it has pulled back, but it is still up 8 cents today. Some of these defensive names, some of these household names tend to weather these downdrafts much better than others. Colgate, one of those, and having a pretty solid week. Unilever, UN, another one with a very strong week. It's actually been a strong 2 or 3 weeks for this company, getting back up through moving averages and currently holding above both of these moving averages. Nice volume coming in the last couple weeks as well to support this move to the upside. Looks like off of this move, maybe we're just consolidating sideways in a flag. Ultimately, a breakout above about $62 and increasing volume is what you want to see here. NUS. This is a New Skin Enterprises, another one very similar to the EPC chart I showed you. Not one of the best stocks. We gapped down. Maybe that was an exhaustive gap. So far, we've been trading off of it. I think we've got to get back up here, get through gap resistance, get through the 50-day moving average. I don't have a whole lot of faith we're going to see that here. I'd be a little careful. We did back off of this recent high around $42. But again, over the course of the last week, it is up. And given the overall market environment, you got to consider it one of the better stocks out there. Let's move to energy. So go over here and we're going to just pull up the XLE. And if we look at the XLE prior to today, we had a really nice move up. Still not a good looking chart. And I would have been cautious at that 20-day moving average anyway. But for a few days, the XLE was moving up. And there are a couple of names that showed a little bit of strength this week prior to today. And one is Chevron. Chevron went up. You can see this gap resistance got right to it, right to that 20-day moving average. And that's where it was no longer hot. And now it's becoming what's not hot. Moving back to the downside, the stock on a relative basis doing not too bad today, down less than 1%. But it did come right at a key resistance area. I don't know. I think that we have a good shot here on Chevron testing that late May low. Next up is Hess, H-E-S. Hess Corp, also very strong for about 4 days, but not today. Back down, Hess down 5.7%, essentially giving away all the gains from earlier this week. It had been hot, pulling back. Maybe it holds on to this area between 59 and 60 and begins to reverse, but volume is already starting to pick up on the selling, so I'd be a little careful. And I don't really like trading in areas that are underperforming, and certainly energy over the course of the last several months, several years even, has been an underperformer. All right, let's move on to telecom. So telecom stocks not having a bad week. It's one area in technology that's been doing okay until today. Actually, until yesterday's open, had a pretty strong move going. But again, look at this. This is a big breakdown in this area. 3 bottoms down here around 1,300 or just below. And look at that gap down. We rally back, get close to 1,300, put in a bearish engulfing candle yesterday. This was a group primed for a pullback today. With the market selling off, it is not disappointing as it's been moving lower. A couple of names within this space, though. Let's pull up Qualcomm. Qualcomm was up. Again, a lot of reversals this week. Qualcomm was doing pretty well. Overhead resistance, as you can see, 79 to about $80. We got up today to 79.10. Now all the way back down to 75. Big reversal. Got to watch that 20-day and 50-day moving average, see if we can hold that. MSI, Motorola Solutions. I actually like this stock a lot. Big move up, lots of volume coming in. This was all earnings related. We did break out, held that 20-day moving average. And prior to today, we were up challenging a new high. And the stock's down less than 1% today, probably still showing a lot of relative strength versus the telecom communication group, and it is. So you can see this is one. If you're going to be involved in telecommunications group, or in that group, you want to be in a stock that is clearly one of the leaders. You don't want to be in a stock that has been lagging for a while. So I think MSI certainly fits the bill of a relative leader. KN, I think this is another one that had pretty strong results recently. Yeah, right here. Gap up, holding the 20-day. Also yesterday trying to break out. And again, another leader in the space. So if I was looking at telecom, MSI and KN are two I'd look for. The last one I have is one I would not be looking for, and that is Palo Alto Networks. I think we've got a big break here, very similar to what I looked at earlier today in the show with VMware in the software space. All of a sudden, you know, you had the earnings, you pull back, you hold this level, and then once you break down and the volume starts picking up on some of the selling, it's a different animal. You don't want to look at the stock the same way. That volume and selling has picked up again here just recently, testing 195. The bounce this week has been nice, but this stock compared to MSI or KN, there's really no comparison to me. So that's what I have for what's hot. Now we will turn to what's not hot. What do you have, Mary Ellen?
Yeah, let's take a look at some of these areas that are not hot this week. And this first one that I'm going to be covering is down, but I'm not seeing any real relevant reasons, but doesn't mean we can't cover it. We're going to take a look at some of these insurance carriers or insurance related stocks. This is Anthem, ANTM, and take a look at this deterioration. It really is declining. Now, these stocks really suffered back here in March and April. During this period, it was all about the Medicare for all, and Anthem was in line to suffer the most from that. So there's a lot of political banter, and certainly as of the elections, they're coming a bit closer. We're starting to get some of the debates out. So these guys could very well come back to being in the forefront. Let's just see if we can get that back again. And Anthem is only one in that grouping that is suffering this week. So I'm going to pull up MGLN, which is Magellan. This is another stock that's in that area and not quite as volatile as Anthem, but still getting hit. There's just a general downdraft that's taking place. Not a lot in the way of volume, but we can see that MACD and that RSI are both trending negatively. Cigna is another prominent name that is in this space. We can see it gapped up here. The company came out with really good numbers last month, but since then it's just been a slow deterioration. So it is an area of the market to potentially stay away from, because we can see just how damaging the sentiment, if it does become negative among these stocks, they can continue to deteriorate. Molina is another name, again, that hit a new high back here in June, and then since then has been in a very pronounced downtrend. We have all these key simple moving averages now trending downward. RSI is negative, and then this MACD had already turned negative in the beginning of the month, but overall quite negative. Now we have to take a look at this next area, because it already was getting hit, but is certainly getting hit with the trade war escalations, and that is semiconductors. We're going to take a look at the ETF SOXX, and we can see it's down about 3.7, and this really has been a rather volatile area. This is when those trade war fears began to escalate in the beginning of this month. Some of the names were starting to firm up and potentially reverse, and of course today they are getting hit. Let's take a look at some of the names that are getting hit harder than the others. The first one is CREE, C-R-E-E. The stock's down 21% on the week. And I mentioned this is prior to today. This is all about earnings. The company actually beat on earnings and sales, but management guided lower for the year. And that's all investors needed to hear. Huge gap down, big volume, continuing to deteriorate beyond that. Another earnings related dip, and more than a dip actually, is ADI. This is Analog Devices. And these guys came out with numbers today. It's another case of management guiding lower, and this is just not what investors or analysts want to hear or see. So ADI really did not firm up with this potential turnaround anyway, and now getting hit further. So when you see these stocks that have already broken below this key 50-day simple moving average, it tries to rally, does not make it. All the while, your RSI is below that net neutral 50, and your MACD is down here below that 0. Eventually, you have these key simple moving averages that now break down below the longer term. So clearly, any kind of uptrend momentum is now lost. So I can certainly show any number of other stocks. As you were to drill down among these semis, you'll see a lot of these names, very similar patterns, where they were just waffling, trying to reverse their downtrends, and now suffering as they break below this key 50-day simple moving average. AMD is another bellwether name. Advanced Micro suffering now down 4.5% with the group. So clearly the trade war fears are having their way with these stocks. Let's move to another area that is actually surprisingly down, and that's food products. Many times consumer staple stocks will rally, or certainly at least hold in during periods of uncertainty. This is McCormick MKC, and the stock had hit a new high last week. And this break is all about a downgrade. Morgan Stanley came out, I would suppose it was valuation related, as the stock was in at an all-time high before getting hit. And the stock is seemingly finding support. I would expect it to potentially rebound because the fundamentals are very much still in place. Let's take a look at another food products stock, and this is Hain Celestial. And this particular stock really never got going as far as participating. We can take a look at consumer staples as a group. This is the ETF, and we can see it's waffled around a bit here, but overall it has outpaced certainly the broader markets. But going back to HAIN, the stock's down 15%. And I did want to point out that this is also related to a downgrade. Morgan Stanley came in. The company is due to report earnings next Thursday. When I'm not a fan of buying into earnings, but when you see analysts downgrade going into earnings, that is not a good sign. One other food-related product company that we can look at in the consumer staples is Cal Mine, and we can see that this stock is down. It's down about 5% on the week. Has everything to do with egg prices. Egg prices are super low. Analysts are looking for that to bottom, but until then, you'll see deterioration in companies such as CalMine that traffic in that product. Last area that I'm going to just show a couple of names is the industrials. So when we see the trade war fears pick up, chances of global growth deteriorating, these are the names that will tend to get hit. This is 3M, and we can see the stock already was in a downtrending period, all trade war fear related, and now down even further today, about 2.6%. Talked about when those key moving averages start trending downward, really how heavy and negative, and we can go back certainly to this May period, similar phenom, any kind of rally attempts are met with resistance at those downward trending simple moving average. So a very negative looking chart. Another one that is in that same space, this is Eaton, ETN, another one again that got hit earlier in the month on trade war fears. Again today, just a very sloppy negative. Overall, you can see these simple moving averages are in a downtrend. RSI, MACD are both negative. And then one last name that we can take a quick peek at is Roper, ROP. This stock had been doing really well, but again, August trade war fears, stock gets hit. Simple moving averages are now shorter term 10, crossing that 21 and then crossing the 50. So clearly any upside momentum has shifted. This RSI below that net neutral, MACD had that negative crossover in line with this first break, but now we are below zero in negative territory. So quite a heavy, rather negative looking chart. Tom, I'm sure you have some what's not hot to share as well.
Yeah, and that Roper chart looks like a head and shoulders top too. That neckline going across there. If we break below that neckline, that would be not so bullish. So could see some confirmation. A lot of volume too on the downside. So that one's not looking very good. But of course, we don't get that confirmation until we get the breakdown. All right, I'm going to look, and I pulled up a 1 week chart, and you can see down here over the last week, materials are down 2.3%. So I'm going to go ahead and focus on this group. And if I actually click on the materials there, you can see commodity chemicals down 3.58%. If we look at both of these on the chart, first, the materials group, not only are we down today and down yesterday, we're failing at that 20-day moving average, declining 20-day, which I think is bearish to begin with. And now we're at least intraday breaking down and possibly closing at a new low, which is not good news here for the materials. This is an area that really has lagged like energy for many years, and not showing any signs yet of changing that. Now, if we look at the commodity chemical group, you can see that this is the group that's leading materials down this week. And I think it's pretty clear here, too, that that declining 20-day moving average has been a problem. We're easily breaking down below these prior lows. And we've got some big lows coming up from the last several months that we're not far from. So this is a group that not only is breaking down the near term, but this could be another intermediate term breakdown on the commodity chemicals group. So as far as looking at some of the area or some of the stocks within this group, I can tell you this is not going to be a fan favorite of mine. because of the way that the group's been trading. Let's take a look at Dow Holdings. So within the space, we already know, and you can see that down here, commodity chemicals has broken down below set a new relative low versus the S&P 500. So this is an area you want to avoid. Dow, relative to its peers, is continuing to slide. So not only are you in one of the worst areas, but you're also in one of the worst stocks within that area. I don't like trying to catch falling knives. I like to wait until they begin to show some relative strength. This one has just been an awful performer. It gapped up on Monday, and it has just been awful all week long. It was nearly $46 on Monday. Now it's below 41. Not good. Lyondell, LYB, another one that just doesn't look good. It was trying to hold on to support. Nice reversal, bullish engulfing candle, and it meant nothing. We have now moved to a new low. Volume trends here remain negative, and another one that's just been horrible on a relative basis. Bad group, bad stock. Olin, OLN, and I'm just going to go through a number of names here in this space, and you're seeing the same thing. Just no reason to own any of these stocks. They just continue to perform horribly. If you're a value investor, you might be able to stake a claim here and say, hey, this is just getting carried away, but probably could have said the same thing a year ago, and really nothing during the entire, bull market move we had earlier in 2019, just total underperformance versus the S&P 500 and continuing to drift lower. Volume's horrible. I see a lot of distribution still taking place here. EMN, this is Eastman Chemical breaking down. I mean, I think you're seeing a lot of the same things. Big volume, support not holding, relative strength awful. Stay away. Just stay away from it. I know sometimes you think, hey, prices are getting cheaper here, but when you're in a stock that's downtrending on an absolute and relative basis, a lot of times they just keep getting cheaper. Huntsman gapped up a few weeks ago, came back down, still holding on to gap support, showing a little bit better relative strength, but still you're in a bad group and not really going higher. It's just that you haven't broken down. That's all the positive that we have to say here about Huntsman Corp. All right, moving on to paper. I'm going to just bring up Domtar, which is UFS. Rough week, rough month, rough 6 months, continuing to move lower. Again, heavy volume. Look at the relative charts. I mean, this is just ugliness, just no interest whatsoever. It's breaking below the December, early January lows and doing so on heavy volume. I just don't see any reason to try to catch this falling knife. Steel, AK Steel, AKS, breaking to a new low here. We saw a little rally there in late July, but we've given it all back, and we're not far from, 2-3 month low, just down around that $2, $2.10 area. AKS seems to be heading in that direction. Again, heavy volume, relative strength picked up for 1 month, but overall, we have been mostly declining. This is, again, an area I'm just not interested in. Another one in this space, GGB. Straight down. This is a ski slope from $4.05 down to $2.90 in just the last 6 weeks. Heavy volume, and again, relative strength just awful. Nothing really to look at here. Also want to mention life insurance, and the reason this is outside of materials, it's in the financial area, but life insurance having a rough week, but it is getting close to support. Notice the low back in March, and here we are again. Slight positive divergence. This is a group that could rally from here. If it breaks down, you want to pay attention and respect that. But if it get a reversal here with that positive divergence, I would pay attention to it. Some of the names in the space, one in particular that I really like is EHTH. I actually bought this one. I own it. I think that this pullback is a great opportunity. Had massive earnings. So when you look at the relative strength, you're going to see life insurance is not a good group, but eHealth has been a monster within the group. So if you're going to take a chance in life insurance, I think eHealth is the play. You can get in with, maybe a limited downside. I'm watching the 50-day moving average. I think current price down to 93, 94 is an accumulation zone, and then you can keep a fairly tight stop below the 50. But that was a strong earnings report. I think this is creating an opportunity here. A couple of others, AFL, which is AFLAC. Not so much. Big move down, failure at the 20-day, another big move down. Look at the volume trends. Completely different picture here. And you can see the relative strength versus the S&P 500, really poor. And we did break out versus the life insurance group because it moved higher while life insurance kept moving down. But overall, you can see this is not a good group. I don't like the volume trends here. I don't like these recent breakdowns. So Aflac would not be a choice. And the last one I have is Unum, UNM. And Unum Group, big volume, breaking down, actually moving below that December low. And you can see the relative weakness here. So if you're going to look at a life insurance company, in my opinion, the best one would be the relative leader or EHTH. Those are the what's hot and what's not stocks that we have for you today. Whew, a lot of stocks in both directions, Mary Ellen. I tell you, we keep getting whipsawed this week. It's hard to tell what's hot and what's not. All right, I am going to go right into the 10 and 10. And okay. I know the first one here is IPGP. So I'm just going to look at it. I don't like it. I don't like the relative strength. Moving lower. You've got a group that's been underperforming, just hit a 52-week relative low to the S&P. The stock just hit a 52-week relative low to the S&P, and the stock just hit a relative 52-week low versus its peer group. Volume trends are weak. We're in a downtrend. I don't see anything. I mean, if you want to play price support, I could see that at 115, but I'm not going to take a chance. Downtrending stocks tend to fail to hold price support. Uptrending stocks is where you want
to. We're not seeing your screen yet.
Oh, then that makes it a little bit difficult. Yeah, I mean, what I was pointing out is just all this negative stuff on a relative basis, and showed the price support. You know, it's one thing to trade price support and expect a bounce in an uptrending stock that's hitting support. In a downtrending stock, and Arthur talks about this a lot, Arthur Hill, you know, when you're in a downtrending stock, you expect resistance to hold, not support. In an uptrending stock, you expect support to hold, not resistance. So completely different look at a stock, but IPGP to me is in a downtrend, not a good group. I would pass on it.
All right. Next one is a computer software stock, AYX.
Love this one. Oh my gosh. This is in my model portfolio. Getting hit today along with everything else, but what a great performer relative to software. Software has been a great area. And I tell you, Mary Ellen, you talked about Shopify earlier. I literally I had Shopify in my model portfolio in the last quarter, and it came down to these two, AYX and Shopify. And I ended up going with AYX. And the reason I did was when I looked at their PPOs, AYX was just slightly better. And that was the only reason. I look across here, I see great volume trends. There's really nothing to not like about the stock other than the fact it's overbought. But we know overbought can remain overbought for a period of time. It certainly has with this stock. And
big growth numbers too. Analysts like it. Big growth numbers. Yeah. Huge. It's a beauty.
Yeah, I like it. And I know you like these stocks that trend above the 50-day moving average, and that certainly has been one of them.
Oh my gosh. Next one is a software name, not quite as constructive, ZNGA, ZNGA.
Yeah, I think I looked at this one recently. I tell you, I look at so many stocks, I can't keep track of which one I looked at and where. Well, actually, I usually can keep track of which ones, but I think it's the where. I might have used, this may have been a scooter mover earlier this week, and I didn't like it. And I didn't like it because the volume trends are weak. You can see the relative strength. We've dropped now to about a 5 month relative low to toys. And the other thing was right in here after earnings in May, this was a pretty big, important support line. We broke below, and I think it might have been a scooter mover here when it got back up to about 580. I think it was just a couple of days ago. I didn't like it primarily unless we were getting back up above the 20-day and getting back through this price resistance. Then I would reevaluate. Instead, what we're seeing is it rolling back over. If it loses 550, I think it's just another ding on the chart. I'm not a fan. I would pass on it.
Very good. Next one is a gold stock, HMY, Harmony. It's in Harmony today.
Yeah, I'm sure gold is probably getting a lot of folks jumping in with all the tariff threats and the retaliations and the tweets and the market down, and all those things tend to play in the hands of gold. And I'll say what I've been saying about gold. I'm not arguing with the short term. Short term is up. I still believe that eventually the stock market moves higher, and I think that's going to play into weakness for gold. But for now, until that weakness starts, I mean, I follow the charts, and the chart here has been very strong, excellent volume. There's nothing to be afraid of here in the near term other than this one just being a little overbought. But that's a huge trend it's been following. And recently, right in here, when it had this huge move, I mean, there's no mistake in the volume that's coming in here. So I don't argue with that. I mean, Wall Street is certainly painting a bullish picture here for Harmony right now. And you can see on a relative basis, it's been a big leader. So short term, I really like it. Longer term, I think if I'm right about the overall market breaking out, I think this one will be painful somewhere down the road. But for now, it looks bullish.
Very good. Then we have a solar energy name, ENPH.
Yeah, this is in my aggressive portfolio. Love it. Just a great relative leader versus the renewable energy space. Over the last year, renewable energy and year to date, renewable energy has been the best performing industry group in the market. And within this space, I think it's pretty obvious to me anyway that this has been one of the best performers. So you've got the renewable energy going up, ENPH going up relative to it, ENPH just crushing the S&P 500, and renewable energy crushing the S&P. So you get a couple of these in your portfolio, and they can really carry a portfolio. I like it. It's overbought, but I believe it goes higher.
Very good. Turnaround name next is Boeing, BA.
Yeah, I know Boeing had a pretty good day. I think it was yesterday, but I think Boeing was up 4% yesterday, really helped the Dow. Up earlier today. I think that we still got some issues here on the chart. We're showing a little bit of relative strength, but this has been a move down in terms of Boeing's relative strength versus aerospace. I've looked at some other stocks in aerospace that I like a whole lot better than Boeing. Now, if the relative strength continues, let's say it moves up to about a 4 or 5 month relative high, and we can clear a key resistance level, and I'm going to go ahead and put that in here for you. I think right in here is really going to be difficult. Off of the gap down back in April, we've had multiple tests up around 380. Today's high was up close to 370, pulling back. I just think that this is a stock that's in a downtrend, sideways consolidating, showing a little bit of relative strength here of late, but I think it's got to do more. So I would pass on it for now.
All right, another gold name, GDX.
All right. I'm sure it's going to be very similar to what I just looked at on HMY. Nice uptrend in play, good volume trends. I can probably just do this one on a regular chart. Yeah, I mean, can't really argue. I would maybe watch the recent lows. I think there are 2 of them here. So let me just point that. That was a huge gap down and recovery. Nice candle there. And then more recently, I would say this reaction low and this one testing it. So those are the 2 key areas to the downside with the 50-day moving average right in the middle. I think you've got a nice uptrend in play if the market continues to be fearful and we get these tweets and trade war problems back and forth, and there's still questions about the Fed. That's a good environment for gold. So this one, might see that breakout at $30. That's what I would look for. That would be your next confirmation on another push to the upside.
All right, another nice software name, Ring Central, RNG.
Yeah, I really like RNG. This is another one that was coming down to the wire on whether or not I was going to pick it for my portfolios. But RNG, I'm going to pull this one up on a relative chart so you can see it's been a real leader. Struggled today, tried to break out, but that's not shocking with the market the way it is today. But look at the relative strength breaking out here. And this coincided with its huge earnings and the heavy volume. I think it's just consolidating before it makes another push to the upside. So this is one that I would certainly have on a watch list, and maybe watch the gap support to the downside. Recently, the recent highs up around 147. It's a wide trading range. It's a volatile stock. If the market really struggles, yes, we could see a pullback here. But I think if the market goes higher, I think you've got a leader here in RNG.
Oh, next one is a small cap name hitting a new high, TLRA, Talaria.
Yeah, this is one that also was considered, I think, for the, I think it was a small cap or the aggressive portfolio that I use. And I think the reason I ended up ignoring this one was because its peer group really just fell out of favor pretty substantially, moving to about a 6-7 month low on an absolute basis. And you can see the relative weakness down here. So that was the big reason why it ended up not making the final cut, but it's been a great performer. I think that was the trading range that it was in for maybe 4 months. And now it's breaking out and the volume's confirming it. I think it looks good.
Very good. Last one we have is ULTA. Their earnings are due next Thursday, ULTA.
Yeah, ULTA, I think, is one of the better stocks within specialty retail. And that shows up here on the relative chart. I mean, we're not far from a 52-week high versus specialty retail. The problem has been specialty retail has just not been where the money's been flowing. So of the money coming into specialty retail, I think ULTA is getting its fair share, maybe even a little bit more so. But the problem is the group is being overlooked right now. I don't know if that changes or not, but I think I'd be okay holding on to ULTA because it is a leader, so long as we don't lose that support area right there. That's where we gap down on heavy volume, right around that 314 level, bounced. Notice the last low right there. If there's one thing that bothers me, and especially if we break down, it's this failure right here at that 20-day moving average. That is the characteristic or a characteristic of a downtrending stock. So if it breaks the support level, I would not be making excuses for it. I'd be out. And that is your 10 in 10. So
very good.
Yeah, there's the list. And I tell you, this has been a tough day for the market overall. Although I haven't gotten an update of late, but we'll take a look at one in just a minute. But there are your symbols. And we're going to move on to a poll, which essentially is just asking everyone, looking at these tools, which is your most useful? And 50% going with sharp charts, which I think is a pretty obvious one. But I'm kind of disappointed, Mary Ellen. StockCharts TV. Why isn't that? I would think that'd be 99.9%.
I would think I think we would be just on top right there.
I mean, we're polling the audience of StockCharts TV. Come on, people.
Well, let's be fair. We do use the sharp charts during StockCharts TV, so there is that.
Yeah, that's true.
It's our main tool for the show.
Yeah, let's not run this poll for everyone out there, especially those that don't use StockCharts TV. I can only imagine what our percentage is going to be.
Oh my goodness.
But yeah, I would agree with sharp charts. Obviously, that's a big part. Blogs should definitely be higher, right? I mean, that's we have blogs. I mean, of course, you should be in the blogs, using the blogs. All right. Anyway, we're going to look at what's going on in the market. I know everybody's worried about what's going on here. You got the Dow Jones currently down 474 points, NASDAQ 178, S&P down 55. We got about 30 seconds left here, Mary Ellen. What do you do on a day like today? I mean, you've got positions out there, and some of these stocks are taking big hits for maybe what might not be that big a deal. But, I mean, what do you do?
Yeah, I would assess those positions, and you know how I feel about that 50-day moving average. See what group they're in. Semiconductors, pretty risky area. You might want to trim back there and tuck your money away for a brighter day, so to speak. Yeah. Mondays historically are down. I know that because I have my MEM Edge show on Monday, and inevitably the markets have been down.
Yeah, I got the stats to back that one up for sure. There's no doubt about it. If we finish like this today, and there's anything else, I mean, Monday could be a rough start, no doubt. So we want to make sure you protect yourself. All right, there is your upcoming schedule. I want to thank all of you for being with us today. Special thanks to Mary Ellen for joining me on Friday, as she always does. Please remember to complete the survey as you exit. It's located below the video player. As a quick reminder, MarketWatchers Live airs 5 days a week, Mondays through Fridays, noon to 1 p.m. Have a great Friday, everybody. Enjoy your weekend. We'll see you Monday. Happy trading.